Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted today to be able to have with me Dr. Paul Jourdan of Amati Global, one of the smartest UK small and mid-cap investors. So welcome, Paul.
Thank you, Paul. Nice to be on your show. Yeah,
well, we've had a sort of like a bit of a wobble on Wall Street over the past couple of weeks, largely on fears of sort of rising yields on 10-year US Treasuries. What's your view on the sort of the broader equity markets going forward, and specifically sort of small and mid caps?
Well, I mean, the wobble on Wall Street. It sort of remains to be seen how significant that's going to be. I mean, whenever you get a market that goes almost vertically up, like the Nasdaq's done over the last year, yeah, you have to expect some pullbacks. It's just what always happens.
Yeah.
So, is this pullback mean reversion, or is it a sign of the market topping out? And I think we're all waiting to see and looking for evidence of either of those two things.
Yeah.
When that market does top out, there's nobody's going to ring a bell and say, "Oh, be careful, this is expensive." Quite the opposite. Everyone's going to remain euphoric about it for some time, and we'll look back in hindsight and say, "Oh, that was the top," and not really understand why it happened then. So we have got to be careful and cognizant of the precipitous rise in that market, as many others. I don't think it's anything that one should regard as unexpected. Maybe it's something significant, but it's a little bit too early to say.
I saw in your sort of like your January note, you talked about sort of like rising inflation, rising commodity prices, and if that's what we're saying, I think is the bond yields are effectively just reflecting a stronger economy. So it's for good reasons rather than bad reasons. But a lot of sort of investors are talking about rotating from sort of like long duration assets, where things like your Zoom and your Teslas, where you only get paid in 10 years, into sort of like more immediate return assets, where cash returns are more valuable earlier rather than later. Do you see that, or is that sort of like a bit of a sort of a misnomer?
No, I mean, I think that is the possibly the big investment dilemma of 2021.
Yeah, I mean, whether to move from sort of like these.
How should we respond to the risk of rising inflation? It's profoundly difficult, actually, because while that question is rising, may rise in importance this year if some predictions of inflation coming through turn out to be true, which I suspect there will be.
Yeah.
But if that happens, it will put a lot of pressure on exactly what we're talking about, this precipitous rise in long duration assets. It's a good way of describing them.
Yeah.
But it's not just any old long duration assets that have risen in price so much. It's ones which have huge strategic advantages coming up and are fantastic growth businesses. Zoom being a good example of that. We're having this call on Zoom. 18 months ago, we'd never even heard of Zoom, or maybe we just about heard of it, but we'd never used it.
I'm an addict at the moment.
Exactly. So, it's not just any old thing that's going up so sharply. It's things which are playing a profound role in this kind of industrial revolution that we're living through. And that's why it's I can't give you the answer to that investment dilemma. I totally understand it, and I'm wrestling with it myself.
Yeah.
I don't know what the answer is.
Well, I think one of the answers, and I could see it in your portfolio, is not to have much cash long term, because if you've got sort of sniff of inflation, then real terms, cash is going to be a pretty poor asset, I guess.
Yes, that's possibly true. Although I think there will come. So the way this may unfold, and I suspect it will unfold, is inflation will go up, and the central bankers will initially around the world will have an almost unanimous chorus saying, "Don't worry about that. It's a one-off rebound effect from the pandemic. It's just the natural thing you'd see after velocity of transactions picks up, et cetera, et cetera. We're not going to pay any attention to it, so why should you?" And they'll try and dampen down inflation expectations in the future. And then the real question comes: is the inflation sustained? So I think everybody knows it's coming. We're going to see a wave of inflation. Is it sustained or not? And that's really where the bigger, more pressure is going to build, because that initial answer of "don't worry about it, it's going to be one-off." You can only say that for so long, and there's very good reason to believe that the central bankers no longer believe in the money supply equation.
Yes.
And they're not really looking at it. And Jerome Powell, chairman of the Federal Reserve, is got on record saying we're going to have to unlearn what we learned at university about money supply, and it's
It
it's
does
linked
seem
to
as though the
inflation.
central bankers are going to run the economy hot, aren't they? They're prepared to sort of like break the 2% rule and sort of like put a bit of juice, because effectively large governments have got such huge amounts of debt that they need inflation to be able to get GDP to debt ratios. I mean, look at England, look at the Britain. It's now sort of like gone from 90% GDP to probably, given we've just spent 300 billion, it must, by maths, it must have gone to 120% of GDP, and likewise Italy must be in even worse position.
Exactly. So we are walking on a knife edge now, really, because the right response to inflation in the past has always been to raise rates and dampen things down, let inflation cool off. But if inflation starts to go way above 2%, that would have been the policy response in the past.
Yeah.
What I suspect will happen when it goes above 2%, probably later this year, maybe not very much later this year, is that they won't do that. They'll say, this is one off, we're not going to worry about it. But then,
totally
so if it persists, then the really tough question comes, are they going to raise rates? And clearly there'll be huge government pressure for them not to do that. And they'll know perfectly well that raising rates the next time around is not going to be catastrophic for the general population, because it's not the general population that's overgeared, it's government that's overgeared.
Yeah.
A couple of years ago, I was at an economics conference where there was a very interesting and well-presented paper on exactly the question you were asking earlier about, how much government debt is too much debt. And you can't answer that question incredibly scientifically and put a percentage on it, but we all know that the answer will come when you realize that there's no way out of it. It becomes a spiraling upward pressure. In the UK, yes, our debt levels have got very high, but at least one can say the average duration on government debt is very long. It's something like 14 years. If that number was a lot lower, then the refinancing rate would have to be a lot quicker, and it brings this the sharpness of this dilemma about rising rates into much more. It makes it much more urgent, because they have to do a lot more refinancing sooner. At least we're not in that position.
Yeah.
But there is a point at which, and this is reasonably well documented, that when debt goes above a certain level, you get into almost like a negative feedback loop, and that and you can't escape from. And we've seen that. It's happened with Greece in the Eurozone crisis, when the market decides your bonds are no longer wanted. And that's this phenomenon known as the bond vigilantes.
Yeah.
There's an FT article today talking about the return of the bond vigilantes. I think that is going to be something we may well see. And so, the question for stock market investors is, what happens next time rates rise? And, so it's certainly something I've been asking our team a good deal. And, that's a really, really tough question. And yes, it will impact long duration stocks. It will cause even the best, long-term growth prospects right in the right place in the new economy to get revalued. Probably, to be revalued downwards, because suddenly your cost of money's gone up. So what kind of things will do well in that environment? And that's, really where this reassessment is coming from. And people want to just have a bit more of a hedge in case we get to that point. Yeah. And I think that's a wise thing to do.
Yeah, I mean, I just cannot see anybody, central bankers, moving short-term interest rates. What you'll see, though, I think, is that the long-term end of the curve, investors will basically, unless the central bankers buy the long end of the curve, if you leave it to market forces, you'll see a steepening of that. And that will mean cash is not a great place to be, but equities should have a bit of a good time, because, if you're going to get nominal inflation, equities hold their value in better terms. Now, just moving on to that, one of your expertise areas is healthcare, which should be absolutely perfectly positioned, given that the pricing power of healthcare has been, over time has been very good. It's been a sort of percentage. How do you see sort of healthcare going forward as a sector? Because we've had this massive sort of like, transformational change in the whole industry over the last 12 months. We've made massive advances, huge amounts of money going forward. I mean, just top level, It seems as though we're entering a bit of a golden period for medicine, for sort of drug discovery, for telemedicine, and all that kind of stuff. I mean, we just got so much change. We've had so much change, but we've probably got even more change coming forward. What's your view, Paul?
Yeah, I completely agree with that. And
Yeah.
you know, the way we've been talking about this for the last few years actually predates the pandemic, is that we're conceptualizing it in terms of the digital technology industrial revolution, which you know had its golden age beginning really in 2010.
Yeah.
So you had all the you had the breakthroughs in 1972, invention of the PC, the desktop computer, and you had the kind of early boom and bust with the dot-com boom, followed by a big bust and a recession, and then the global financial crisis. And when we emerged from that, at that point, 2010 kind of coincided with the point when these new technologies that were digital technologies were available. They worked incredibly well. They were cheap enough to make a real difference, and they allowed the landscape had shifted where it was absolutely possible to start a new business, deploy these technologies better than the incumbents, and take market share. Yeah. So it was a small company investor's dream in that sense. And you know, if you look at the theories of Carlota Perez, who's written about industrial revolution cycles, and who you know I like her work a lot. I think it's very appealing, and it's been a source of optimism through some quite difficult years. You know, she would argue, she talks about this golden age, and maybe that's what you're referring to, and that was very much the case. 2010 to 20 was a golden age of you know, digital IT type businesses, and so we've been thinking, well, actually, in the healthcare cycle, everything takes longer, it costs more, it's slower moving. And we're now arriving at a point when it'd be reasonable to expect that actually you're getting that kind of golden age of healthcare investment, because new technologies which were developed with digital technology are now coming to market at a rate which was, you know, way in excess of anything we've seen in the last 20 years. So, you know, a few years ago we had the first gene therapy approved with Kymriah, Novartis's product Kymriah, manufactured by Oxford Biomedica, which is one of our MSD companies.
Yeah.
You know, that's a big breakthrough, and there's a lot more to come down the road in that respect. In terms of, they use something called the lentivirus to do their gene editing. We think the lentivirus applications are going to balloon over the next 10 years, but there's other ways of editing genes too.
Yeah.
One of them is called electrofloporation.
That's
or
Maxcyte,
flow electroporation, which is Maxcyte, another company we like a lot. It's a big holding in the fund. It's done unbelievably well in the last year, and it's now going to list on NASDAQ. So it's become important enough to get a bigger audience. And I suppose we think there's a few themes in healthcare which are the things which are now, you know, in entering this golden age period. Gene editing is one, with individualized cell therapies being the result, and they can be extraordinarily effective in a way that could not have been dreamt of 15 years ago.
Yeah.
There's other areas too.
Maxcyte would help gene therapy, wouldn't it? I think is that right?
Yes, Maxcyte is just a different technology for editing the genetic material.
It helps getting the actual sort of like the DNA into the cells that you need to make the sort of like super T cells, for instance, of the CAR T and stuff.
Exactly, and there's a very simple difference between what Maxcyte does and what Oxford Biomedica does with the lentiviruses. The flow electroporation makes a temporary change to the cell, whereas the lentiviral, it's called transfection. When you put something into a cell, that's a permanent change, and they do have different applications, therefore, and they're both important technologies. But if you look at the number of drugs being filed or in clinical development for approval over the next decade, this is predominantly where they are. It's in gene and cell therapies. But there's another area that we're very interested in and see similar commercialization in the next decade, and that's to do with data processing and data analysis. And that comes under the category, the fancy name for it is artificial intelligence.
Yeah.
But that's
Renalytix.
It's a data science. It's applying data science to big data sets.
I see your biggest position is Renalytix,
Renalytix,
which is AI.
Yeah, which is applied these statistical methods to data in kidneys, and so they produced a new diagnostic test for early stage kidney disease, something that, if you can treat kidney disease early, it's quite curable. If you leave it too late, it becomes insoluble and hugely expensive to deal with, and people die. So it's one of the most premium areas for getting earlier diagnosis, and so developing a test in that area is of real significance.
They just got approval, didn't they? Or they just got Medicare.
They've applied for approval,
and they got
because it's a breakthrough technology. If they get approval, then they'll automatically qualify.
And the stock has knocked the ball out of the park. Another one, isn't it?
It's another one, and again, we remain really excited about it. But on that same theme, we're also we bought into a company late last year called Sensyne Health. Yeah,
they came out with some really positive NHS AI data, didn't they, this morning?
They've just had a UK. They're approved to use a new product for treating COVID in UK hospitals, where they're basically they're able to take your electronic patient data,
which is fabulous,
and then suggest to hospitals which treatment methods are going to be most suitable for each individual patient, and that's what this kind of AI analysis is really good for.
Yeah, well, if they can do that, I mean, for Chelsea and Westminster, I think it is, then presumably they can also do it for other healthcare trusts or even for the UK. Because I mean, one of the big conundrums that the UK government has been getting a lot of stick for is actually prioritising who gets the vaccine. And when we come to next winter, everybody's got to get the vaccine again because the immunity only lasts for 6 months. Now, rather than just saying, okay, let's prioritise on age, why don't people prioritise on actual susceptibility to hospitalisation, to do a smart decision making to, prevent the NHS getting overburdened again? And that would be a better way of actually presumably selecting who gets the first shot, rather than just say, okay, somebody's old, but they may be really healthy, but we'll give them it anyway,
Well, that's true. I mean, just as a slight caveat to that, I mean, we don't yet know how long the immunity lasts for from vaccines. We certainly hope it lasts longer than 6 months. That'd be a kind of disappointing outcome if that's all it was.
I've heard the press is only, whether it's true or not. I mean, so you believe it's more than 6 months?
Well, I think it's just a bit too early to really know. But when the mass vaccine programs are 6 to 9 months, a year down the road, then we can do the population surveillance and really find out how much immunity. If you just have the disease itself, immunity, the length it lasts is a little bit unpredictable. But having the disease itself is the equivalent of having the first vaccine jab, not both of them.
And I saw the Wall Street Journal saying it was 4 to 6 months if you had the disease.
Yes, but hopefully with the vaccine it'll be longer. But we don't yet know, so maybe. But it's clear that we're going to need more vaccines for new variants.
Yeah,
and you're absolutely right. We're going to have all over again the same question of, well, how do we prioritize it?
Yeah. Another one in the portfolio that caught my eye, because effectively in the healthcare sector, what we've got is a unbelievable speed of development in vaccines with mRNA technology. I mean, that is just blown to pieces what everybody expected in terms of efficacy, and also the old way of just getting a bit of the old virus and putting it into your body, for flus. This is the sort of genetic engineering. So massive developments in vaccine, tick in the box, huge. That will really help us. Huge developments in testing, which is brilliant with accuracy. And we've got sort of like the UK is now sort of starting to really ramp up with a whole bunch of, Novacyte and, sort of like Abingdon Health and Avacta and all these kind of guys, which normally. So tick in the box on the old testing, and hopefully we'll get tracing involved with that at some point in time. The final bit is coming up with a therapeutic or something that's going to help people who've got a compromised immune system, say the 200 million people worldwide who go into hospital. Now, one of your portfolio stocks is Synairgen, which I understand is on the cusp of sort of like coming up with a treatment to help people if they've actually got severe symptoms, because it will clear the lungs and stuff. Can you just quickly talk about that company? Because I hadn't really come across it before.
Synairgen's, the fortunes of Synairgen were dramatically changed actually by COVID.
It was amazing, isn't it? So many companies have.
Yes, exactly. As a number of the other companies you were talking about, it's the same thing. So they essentially have one product that's been in development for a long time, which is an inhaled version of interferon beta.
Yeah.
And interferon beta is one of the chemicals in the body which regulates the immune system. and so there are no safety issues that are known of with interferon beta. It's been used for the treatment of MS for many decades. It's not been given as an injectable, but Synairgen have been developing the usage as an inhaled version. And the beauty from a COVID point of view of an inhaled version is it gets the drug exactly to where your infection becomes severe, which is in the lungs.
Yes.
And the idea of it is that it can function as a broad antiviral therapeutic for lung infections. And so it ought to be very well primed for helping out with COVID. I mean, one of our great disappointments of last year, and we helped to fund the phase 2 trial from our venture capital trust back in, I think it was maybe March, April. They raised the money. And one of our great disappointments was after actually very good phase 2 data, that the regulatory authorities didn't just say, well, you know what, this is shown to be efficacious. We can't tell exactly how efficacious because the trial was small, but it had showed statistically significant benefits, which were potentially very substantial benefits. And we were clearly hoping that they'd get some emergency use approval, really, so that the terrible death rate we've seen over the winter could have been mitigated.
Yes.
But they didn't. They chose not to do that. It was personally a huge disappointment for me. They chose not to do that because
was this in the UK?
I would love it to have been used, and I think it could have mitigated the death rate. But look, I'm not a data scientist.
Is this in the UK? Is it? It was in the States.
In the UK, there was no regulator that decided to give it. I think they all must have considered it. Had this been a US company, I'm pretty convinced the US authorities would have run their own trial on it at a much bigger scale immediately, and B, they would have given it emergency use approval for use in the US, and then probably else would have copied. This flew under the radar a bit because it was a tiny little UK company without much political clout, and so the politicians weren't clamoring for this to be approved. But I think it could have really helped out, and so I'm very sad that it wasn't used this winter. Instead, the regulator asked for a much bigger phase 3 to be done, which is now being done, and we helped to fund that a little bit as well. And but what we couldn't tell when that happened was, what was really where was the pandemic going to be at in April this year when the results will come out. As it turns out, the pandemic's still raging, so there's going to be plenty of use for this if the phase 3 data is good. But there won't be any safety issues with this drug. I'm very convinced by that. So the questions are, will it be shown to be efficacious and efficacious enough? I suspect it probably will, but we'll find out in April on the back of a significantly larger trial. And it's got the potential to make that difference. So I mean, in order to get out of our lockdowns properly, we obviously need the vaccines are all about reducing transmission, stopping the thing from mutating as fast because not as people get it, and obviously stopping people from dying from it. The vaccines are very effective from that, but some people will still get it.
Yeah, a lot.
And some people will still go to hospital with it, and we cannot stay locked down like this for very long. I mean, there comes a point at which the number of people who are going to die from the damage to the economy is going to exceed the number of people who would die from COVID, and that question's not pushed very hard, but we have to do the calculations on that because. It's clear, I think, to everybody that there's a mighty disaster coming if we just think we can stay locked down forever. It just can't happen. So we desperately need some therapeutics to actually fill that gap and be able to reduce the mortality rate of COVID cases to a level at which it's no more than flu or no more than things that we just have to live with, and let it become a part of normal life. So the role Synairgen might play in that could be of global significance, but we have to see the data now in April or whenever it's going to get to the end of these trials.
What do you think the chart? I mean, I pushed the clock back to March, April time, and I had so many medical experts and scientists saying, "Oh, it takes 10 years to do a vaccine," which it frankly did. Look at history, and actually, when we came through, the amount of effort the human race put into it took 10 months to sort it out. And you just say, we've got the silver bullet on the vaccine, we've almost got a silver bullet on the testing. Are we going to get a silver bullet on the antiviral and therapeutic, given the amount of global investment being put in? Because that answers the first question that we had: how is stock markets going to be positioned? Because frankly, if we're just going to have a very heavy debt load and we get out of it, in the summer and we have a silver bullet therapeutic, then frankly, it's the economy's reopening, and all we know is that we're going to get inflation. We're going to have a roaring economy for the short period because everybody wants to go on holiday and enjoy themselves on experiences.
Yeah, and I think we will see some significant advances on therapeutics, and I'm hoping obviously Synairgen will be part of that. It won't be the only thing. Then, you know, if somebody can perfect an antibody treatment for COVID, that will completely knock it out.
Can I ask you a quick question on antibody treatments? Now, the one concern I've had with antibody treatments, I've heard is that if you use antibody cocktails like Eli Lilly and Regenerons, etc., then it increases the frequency of mutation, because effectively the virus will try and actually change its spike protein, and we've seen that already in South Africa, where basically you've got people with a lot of compromised immune systems because of AIDS.
I mean, yes, it's not that the virus is a conscious thing that sort of,
exactly.
It's not like Tom and Jerry, where it's like a little mouse that changes.
It's pretty ingenious.
It sees what Tom's doing and it kind of changes its strategy. It's just, it's simply evolutionary.
Yeah.
Obviously, if you put a whole load of this virus out of effect, it's no longer, it can't reproduce itself. The only bits that will reproduce themselves, which are those bits of it which have mutated. So any kind of treatment will cause the mutations to stand out, because it's effectively suppressing all the existing virus, and so only those bits which mutate can then reproduce, so they then become dominant. I mean, that's not to do with antibodies. That any treatment will have that impact. And it's the same like with antibiotics do that to bacteria, because all cells have mutations over time, and all life forms do. So it's that's just the evolutionary basis of all life forms.
But if you attack the RNA on it, or the DNA of the antigen, then you've got a better chance of actually getting a cure, haven't you? Which is rather than trying to smother it to death, where it can wriggle around and decide it wants to mutate. If you actually nail it and shoot it with an RNA and take out one of its cells, then you've got a better chance. And I think that's your sort of your gene editing or whatever, isn't it? It's sort of.
Yes, and those things I would also expect to happen. And I mean, come back to your point about timelines. I mean, for the vaccine to have.
I won't hold you.
For the vaccine to have come onto the market in 10 months, it meant actually that somebody had to develop that vaccine in the space of 3 or 4 months.
Yes,
that's actually what happened, and then it went through testing. In fact, maybe even less time than that, because the phase 2 and phase 3, those were happening, way back in April, May last year. So it relied on some brilliant vaccine scientists to, as soon as the genetic code became available, they were on it from back in January. And
I alert investors basically, because the vaccines have made Moderna, Novavax, BioNTech, and they're all, so I think Moderna's probably an $80 billion company, Novavax is 2025, and I think BioNTech is about the similar sort of number, and nobody had heard of these things before, sort of 12 months ago. But if your and I's suspicions are correct and we get a breakthrough on the therapeutics, which is equally going to be a massive market, as we've seen with COVID testing, likewise, opportunities could be, if you pick the right spots, and it is difficult to pick the right spots because
very difficult.
This is like throwing dice. But if you do, then you're going to have some goal. You're going to have some home runs, presumably, sort of like going forward. Just turning industry now, sort of fintech. I did notice a couple of other good stocks, which are sort of like obviously helped in terms of the whole move towards digitization and the economy was. Argentex and Equals, and Equals came out with a sort of like they've got into a bit of crypto, I think, this morning as well, which was sort of quite interesting. But how do you see the sort of digitization and fintech in general?
Yeah, I mean, fintech has transformed so much of banking and retail financial services and beyond. In the case of Argentex, it's that's really the Argentex customers are businesses. So it's trying to
B2B.
Allow companies to get a sophisticated treasury function without having their own treasury department to hedge their trading and their transactions into the future. Fintech's a huge area, intensely competitive, lots of capital being thrown at it, lots of the most, lots of interesting things going on in private companies.
Scale means a lot in this industry, doesn't it? It's sort of like the bigger you are, the bigger the profit margins. But it means consolidation, and presumably Argentex and Equals are sort of like potential takeout targets. You either acquire or you were acquired, I guess.
Yeah, exactly. And very large sums of money being thrown at some fintech companies in the private area. Yeah. We have an investment in Draper Esprit, and they have some big fintech investments, including Revolut, which is obviously a well-known one.
Oh, of course, yeah, Revolut, yeah. And one of the ones you've done very well at is HeiQ. I've never even heard of this one, which is sort of like it's a COVID-resistant fabric or something.
HeiQ, we call it.
So, HeiQ, sorry, is it?
HeiQ, and HeiQ came along. We met HeiQ last November, and they were doing a float in London. It's a Swiss company, and there's certain things we look for in businesses. We love companies that are still founder-led, where the founders got real entrepreneurial nous.
Yeah.
We love companies which have got lots of IP and developing innovative products, and we like companies with big growth markets and good at spotting commercial opportunities, and and have strong balance sheets and so on. And HeiQ came along and just ticked all these boxes, and it's a hugely innovative company. It's a company where there's nothing quite like it in the London market. It's a technology, it's a material technology business. So it's all about, they're all about material sciences, developing new fabrics, new kind of materials that will that have obvious, large new industrial.
We saw this in Star Trek, didn't we, 20 years ago? But it didn't actually.
Yes, exactly.
Now fiction is coming to reality.
Yeah, and so the thing they had a huge success with last year was it was actually a product they developed, I think in 2014.
Yeah.
Because some friends of the founder in Switzerland were going to volunteer to go and help deal with the Ebola epidemic in Guinea. And he thought, well, if you're going out there, we better give you something to protect you. So they developed this fabric that was that would kill viruses and bacteria that landed on it, and they called it ViroBlock. And then when the pandemic came along last year, they kind of got it out the drawer and thought, oh, we might need this again now. And so something like 1 billion masks have now been made with ViroBlock, and we have some at Amati we're wearing ViroBlock masks.
Yeah.
The beauty of it is if you have a mask made of ViroBlock or any other bit of clothing, it removes that element of, if you touch it after you've been potentially exposed, you might then touch your face, and it just takes that much less out of the equation.
Yeah.
Because certainly within half an hour, viruses and bacteria on this will be dead. But even within 5 minutes, a lot of them are killed, and it retains that property over long periods. So it's a very has obvious applications, and they've actually just released an improved version of it, which they're calling ViroBlock Permanent, which will survive more washing machine cycles than the current one will. And they've also developed it as a liquid that can go into laundry, so you can do your laundry and if you like, then impregnate your fabrics with this new property. So they're going to sell it into hotels and other commercial laundries. It's just tightening up hygiene possibilities around the world, and that's obviously going to play a part beyond the pandemic. I'm pretty sure over the next decade we're all going to be much more aware of our ability to get infected with stuff.
Oh yeah,
traveling around the world. It's not that mindset won't change. The reason why lots of the population in Asia wore masks for the last decade is because they remembered SARS when it first came along. That's when that really happened. Probably mask wearing in Western Europe won't just disappear, because actually some people will remain conscious. If you're traveling around on the tube, do you want to lower your chances of infection? Maybe you do. Not everybody, of course, but
yeah. Hey, I mean, if you think about it, crikey, with I think the stat was in the Independent, nobody's been hospitalised for flu in 2021 because of mask wearing and social distancing. So it just shows you that actually, if you've got the right sort of like clothing and masks, etc., then you can at least avoid flu, if nothing else, which is
exactly. But I wouldn't like to think HeiQ is only about ViroBlock. That's one of 9 or 10 different technologies that they sell now, and they've got a whole load more in development.
Yeah. You got a lovely blend in your sort of like your portfolio of growth, of healthcare, etc., and you've got some value in there as well. I see you've got Air Partners now. I know Lord Lee of the Financial Times loves this one, and it's still I just pointed out to investors because it's trading at an unbelievably ridiculous low valuation. I got it at sort of like less than 4 times EBITDA and sort of like less than 7 times PE ratio, and I think it's got a ton of cash as well. I think it's got about 10 million of cash built up from it was actually a bit of a beneficiary because I think it was helping everybody get PPE out of flipping China.
Yes, I mean they got an interesting mixture of businesses in there.
Yeah,
and the old Air Partner business was really all about private jet charters. So if you're a government or a business and you want to charter a jet to fly people from A to B, you're very likely to do it through Air Partner. They're probably the biggest in that sector. And they've been bolting stuff onto that. So they also have a freight business, and it was the freight business that was moving a lot of PPE around in the pandemic. And obviously the air charter business, you might have thought, well, that all dried up last year, but it didn't, because they did a lot of the repatriations that were going on last year when the government were laying on flights from around the world to bring people home. And I suppose it's a business with a very with lots of good history behind it. It tends to generate very good returns on their cash investments. It's not a capital intensive company because they don't own the jets. They're just but I suppose right now the reason that it's cheap is because it doesn't have a lot of visibility, and it never has had, and it doesn't know which bits of its business are going to be the ones that fire. And last year actually had one of its best ever years.
Yes.
And so some of those metrics are very, historic EBITDA will be incredibly low because it's just had a complete bumper year.
Yeah.
I can't tell you how well they're going to do this year because it just depends on, they've got a whole load of businesses there which are service providers to airports. How well they do will depend on how long airports get going. So, they advise airports on security issues. They'll advise them on how to open up. They'll advise them on how to deal with the pandemic. But if airports are completely closed, those businesses won't do too well. While we've got quarantine restrictions so tight in the UK, companies are going to think long and hard before sending their executives on private jets to other parts of the world. If they are going to send them, they probably will go by private jet because there aren't that many scheduled flights around.
Yeah.
But they'll be negotiating with. They'll need to be very important trips because they'll need to get government clearances and so on.
Yeah. But if the thesis is right that we talked about with healthcare, that if we do hopefully find a silver bullet on the therapeutic, then the economy's opening up, and the governments need the airports open because they employ so many people, and likewise all the subsidiaries and the airlines. I mean, it's part of and everybody just wants to travel and they've just been locked down. And whether that's by private jet or by charter, they don't care. They just want to have a holiday.
Yes.
So if the thesis is we do get a silver bullet on the therapeutic and antiviral, then I mean you're going to see. I would say you're certainly going to see with Air Partners multiple expansion because it can't possibly get multiple compression from the lowest level I've ever seen for a stock. And it's got a shed load of cash. It can get out. I mean, I don't own the shares, but it can certainly outlast the pandemic, I would have thought, just because of sort of conserving cash.
Yeah, I mean, I think it's important in a portfolio that you have a mixture of companies that will benefit from opening up and those which will benefit if things go wrong. Well, not benefit, but the things which will survive and do perfectly okay if things go wrong and it doesn't open up as we hope it will. And you can decide on your own which mixture of those things to have. But diversification is very important. So Air Partner for us is one of those stocks in our portfolio which should benefit from opening up.
Yeah, another one is Fancy Cake Maker, Cake Box. I mean, all their franchisees have been closed, but hey, I mean, my mother-in-law is desperate to go out for a coffee and a cake.
Well, I mean, interestingly, and this is one of the great strengths of Cake Box is because it's a franchise business. The franchisees are able to go the extra mile, and if they can't actually open the shop, they'll do home deliveries, and they were very smart right at the beginning of the pandemic, organizing home delivery capability and ordering online. And so actually, a lot of their franchisees are trading through the lockdown by doing home deliveries, etc.
Yeah.
And, it'd be quite hard to do that if it was a centralized, nationally controlled company. But because you've got incredibly keen, motivated franchisees running each of the shops and the groups of shops.
Yeah, good point.
They're more than happy to go the extra mile, and they've been doing that.
Yeah. I mean, another couple sort of like which have done really well during the pandemic, but maybe sort of like have a headwind on comps and stuff, is Gear4Music, which has had sells online guitars, I think, and drums and music kit and stuff. I don't know, but hey, has had a terrific one because everybody's been wanting to make some music at home and just enjoy themselves. And then I guess another one would be Strix, because I mean, everybody's had to buy kettles and stuff to have coffees and teas at home because they haven't been able to go out to cake boxes, franchises.
Yeah, no, absolutely. And Gear4Music, you know, that's obviously a company pretty close to my heart as a somebody used to make a living by being a musician.
Oh, did you?
And,
what instrument did you used to play?
Violin, which is where the name Amati comes from. Amati was one of the very earliest violin makers, and one of the great violin makers, well, a family of violin makers.
Oh, right.
Yeah, and I've known Gear4Music since it floated.
Yeah.
And you know, they are passionate about what they do. They're a superb online retailer. You know, selling online is not the same as selling in shops. You can't just immediately convert from one to the other. It's
return
a whole set of skills. They have done something which I really like, which is they've invested in their own software platform, and they built it up over years. So, you know, they own this wonderful retailing platform that they have.
Experience, yeah.
And, you know, clearly in lockdown was they were one of relatively few companies that were actually benefited from lockdown, because people had more time on their hands. People were willing to invest in musical instruments just to have, you know, this incredible way of spending your time at home to just explore playing music. What could be better? But in addition to that, the high street shops being shut, online was the only way you could really do it.
Yeah.
And, you know, the couple of other online retailers that emerged from the bigger high street retailers of musical instruments in the UK have also done very well this year. But Gear4Music is the biggest in the UK.
Yeah.
It's also very successfully expanded into Europe in the last few years. And interestingly, the biggest online retailer in Europe of musical instruments is a company called Thomann.
Yeah.
Thomann is a remarkable private German company that is based out of one kind of town in the middle of the forest in southern Germany, and literally the whole town is Thomann. All the manufacturing, the online retail. So everywhere you go is another Thomann premises, almost in this amazing little town. But because of Brexit and the incredible palaver over getting stuff in and out of the UK between Europe, Thomann now, for maybe temporarily, but they're not exporting to Europe at the moment. It's just too difficult. So, you know, Thomann is now no longer in Gear4Music's core market of the UK, but Gear4Music solved all the Brexit problems by having European facilities over the last few years. So they are very much still exporting into Europe.
Yeah.
So actually, I'm hoping that they're a beneficiary of that. I don't know for sure.
Switch, yeah.
We haven't spoken to the company about it, but we have noticed that Thomann is not exporting to the UK right now.
Yeah, and once you get to a certain critical level, you become the sort of go-to provider of that sort of vertical, don't you? I mean, it's like I don't know, ASOS and Amazon and Boohoo and AO World. Everybody's the brand becomes synonymous with the.
When you've got your account set up with somebody and you know that they've done you a good job in the past, you're going to trust them the next time. Yeah.
What about the kettle maker Strix then? Because I mean, is it possible to sell any more kettles this year than last year, like the bread making machines and coffee makers?
Yeah, I think Strix will carry on doing very well. It's a remarkable business.
Yeah. What about the actual sort of property? Now, that's quite an interesting one, because you've got CLS Holdings, which I think does office sort of renter and stuff like that. Now, the whole property and sort of commercial, residential and all this sort of stuff is up in the air, because there's no doubt about it. On Wednesday's budget, Rishi Sunak has already signalled he's going to help the residential property, and he's going to help retailers as well with a bit of luck, because he wants the high streets back and operational. But if you're an office actual supplier, I didn't actually see it. We'll wait and see on Wednesday, but I don't think he's going to help the office landlords that much. But I mean, I don't know. What's your view?
Yeah, I don't think he needs to help the office landlord too much right now, and so that's the right outcome. You know, clearly high street retail has been devastated, and you know, there's going to need some government intervention. I think, you know, obviously the huge question about the office market is, when after unlocking, you know, what happens? Does everyone just go back to life as before, or does life change? And you know, I think the answer to that is a little bit dependent on how unpleasant your commute is. So if you've got a deeply unpleasant, vastly long commute, you're probably not going to want to do that the same way you did before. And And we've now kind of proven that, yes, you lose some productivity by not being in the office, but you gain in some other ways. And from a lifestyle point of view, a lot of people want to carry on. And that, in the City of London, in financial services, I don't imagine that everyone's going to go back to doing 5 days a week with a 2-hour commute every day.
No, and I think a lot of corporates are insisting that they don't, because they're actually saying, I mean, I know Unilever, I think it was Paul Polman said 2 months ago that he's going to tell all his staff they're only coming in 3 days a week once we get through lockdown. Whether that's a sort of like just a marker for people, but it means that presumably they can reduce, if they organise it properly and spread they can reduce their property footprint by 40%, I would have thought.
Yeah, I think that's right, but I kind of think that will be a big city phenomenon. And if you've got an office that's more in either a regional location or an out of town location in the M25 ring, I think it's much more likely that those have local users, and the small disbenefit you've got by commuting is more than offset by the benefit of getting people together. Because remember, work is not work is also a social thing, and the social context of work is I think hugely important. And I don't think people give up on that.
I mean, I've got 2 daughters, 23, 24. They're itching to get back and have a party. And what's also quite interesting is that actually, because people have lived out the sticks, I would say one of them still living with me now because they've come out of the rented because of the lockdowns and stuff. But they're itching to get to live back into the cities. They want an urban life, and I think a lot of sort of like just middle-aged people are sick to death of sitting out in the sticks. Okay, it might be very nice and very pleasant, but actually they want a bit of action. And therefore, I think you'll see a lot of people going back into it. So the big question comes in my view, with the commercial property boys, is if there is in the big cities some vacant space, can you repurpose it? And whether that's something to do with online, whether it's new services, or just even retail, because I think still will be a big demand for people to live there, because I think they want to in a cleaner environment.
Well, no, I think you're right, and you may see some central London offices getting converted into to residential, and the legislation makes that very easy.
I'd love to live in Edinburgh. It's my favourite city in the UK, where you are.
Well, mine too.
Well, there you go. You see, so you get all the tourists, you get all the history, and you get all in the nightclubs and the restaurants and this sort of stuff. So you get a more urban environment, which is less car congested, cleaner. Becomes a nicer area to invest in.
And Edinburgh's a good example where I got little doubt when we get over the pandemic, we're all going to want to come back to the office. Having said that, we'll probably be a bit. It'll be easier to embrace flexibility than before. If somebody wants to do something at home, it's fine, because we know it's possible. We know it's easy to stay in close touch, and we've all got these wonderful video communications. And I've been working for the last 3 years to try and move all of our meetings into video, and not being able to do it. And partly the brokers who were organising us lots of meetings with companies, they were very reluctant to turn those into video meetings. Now it's happened. I couldn't be happier, because we were doing a huge number of telephone meetings before. The video adds another dimension to that, and actually means that we'll need we get more out of video meetings, and they're now absolutely the standard. And that's from our point of view, not being in the City of London, it's quite a big plus.
I would agree, yeah. I mean, when I spoke to Gervais Williams, he said he never wants another face-to-face meeting. He just wants Zoom, because he can do so much more, speak to so many more companies for his productivity. It's absolutely outstanding. Now, just big picture-wise, I was looking at your returns from the fund, and I mean, frankly, you've knocked the ball out of the park over 20 years, 10 years, 5 years, 3 years, 1 year. You're in the top quartile in just about every single sector. Big question: what are your target returns going forward? Because I think over 12 years, excluding dividends, you're over 12% per annum. Sorry, over 20 years, which is was a peak at the .com sort of like bubble. So you've had a terrific. What are you looking for going forward? I mean, how? I won't hold you to it, but is that maintainable, that level of double-digit return?
I mean, I'm absolutely not in the business of. I think it's wrong to be an equity investor and try and predict your returns, because it doesn't mean anything. You and I both know markets can go up very fast and they can go down very fast. And I think anybody investing in this kind of fund, or any stock market fund, needs to be really realistic, especially when you're doing it now when markets have gone up a long way. We were talking earlier about some of the potential risks around inflation, and the risk is interest rates going up. This market won't deal very well with that. Just this isn't a time to be greedy about, or over ambitious about it. Just keep good diversification, stay wary, find good companies to invest in, because ultimately, if you have some bad years but you've got good companies, you recover and you come back. That's the key. So that's your best protection in investing in the stock market, is to have great businesses that you're investing in.
Well, as I say, I think you say that the fundo since the .com sort of peak has gone up by almost tenfold, whereas the FTSE 100, I think, is exactly the same. So I think I know which one I'd put. But what's Amati's sort of holding period in terms of timing wise? Is it how many years on average? Is it sort of 2, 3, 4 years? Or
it's kind of it's maybe 3, 4 years.
Yeah.
And it does vary a bit. So there are certain. If we see a sea change coming in the market, then clearly we're going to want to shift things around a bit more than we normally would.
Yeah.
And other years when actually it's kind of business as usual type years, we have very low turnover, so it can go up and down. And clearly when the pandemic came along, we had made some adjustments, and we have a kind of a hand on the tiller that's not trying to kind of fling us sharp left, sharp right, but just keep a few small adjustments here and there.
Yeah. And have you got any sort of other stocks or anything like that you're sort of like looking over, or it's too early to say at this stage? You're sort of like holding your cards close to your chest.
Yeah, I mean, obviously we never talk about things we're thinking about buying, because that would be a bit silly.
Yeah, no, I can understand that. Okay. Yeah. What about sort of top level risks of the market? I know we've talked about rising inflation and yields and stuff like that. I mean, Rishi Sunak, is he going to play a curveball and sort of like push up corporation tax? Is the Biden administration going to jumpstart corporate tax? Having seen Trump reduce the corporation tax to 21%, and there's people talking that's going to go up. So it looks as though we've got some tax coming at some point, but they don't want to do it too soon because you might sort of choke off the recovery. Yes,
I think that, well, certainly the mood music that's being put out there is not along those lines. I mean, but I think there's an equal risk, because the market loves instant gratification and will give a big cheer to yet another round of QE and another big splash in budget deficit blowouts. I would kind of be happier to take a little bit of medicine now and just say let's not, because there's a significant danger of a policy mistake now of splurging too much.
Yeah.
And Rishi Sunak's absolutely right when he's talking about the dangers now and the need to rebalance this budget deficit.
Yeah.
It's no coincidence. I was reflecting the other day that this idea of this thing that's called modern monetary theory, which is I learnt about that when I think I was at university or something. Yeah, I mean it's kind of this bogus idea that government should just, they can spend as much as they like. It's not really going to affect other things.
Yeah,
and it's become quite a fashionable theory among some economists. But most economists who've been around the block a few times think it's complete nonsense. But anyway, it's no accident that the initials for that are the same as the initials for magic money tree. Because it's kind of
good. I never thought about it like that, but you're exactly right. Yeah, magic.
And the two things are kind of the same, but if you shake the magic money tree too hard,
good spot.
It starts producing poisonous fruit. And so I'm probably more worried about that than I think the need to be careful now in policy is more important than the need to keep all the plates spinning at top speed, because there is a significant danger of overdoing it and inflation getting to a point where it's then not going to be controlled well enough. And and of course, why am I worried about that? Can we not just live fast, die young, as it were? With it's because actually the damage that will do in the long run is more than the damage of take a bit of medicine now. It would be my preference. I don't think it's going to happen, but well, I think there actually has been. The point you're making is absolutely spot on, because if you look at sort of like, there's some pretty bad sort of like poisonous fruit happening. And it depends on which side of the fence you like. But you look at, we've got SPAC this, SPAC that coming out. We've got Bitcoin at over $1 trillion in worth. We've got IPOs coming out our teeth in the States. And to add to the sort of the mix, we had the GameStop scenario with all the Reddit boys. I mean, that just says to me, it's the market in spots is going mad to a certain extent. It's just gone absolutely nuts. Yes. So it's let's aware of all of that, and you need to stay aware of all of that in deciding how to invest. That's important.
And then just final question: any sort of tips to sort of like replicate some of the alpha that Amati's done for sort of like investors? What to sort of like just a guideline when you come to look for sort of like companies? Anything that would be useful for them? Don't get sucked into bulletin boards. Would be probably top of one of them, I guess.
Well, I'm not judgmental about bulletin boards, and there's some very knowledgeable people will sometimes write on bulletin boards.
I'll take it back. Yeah. Okay.
But I mean, I think the key thing is the key thing to investing is to understand the risks that you're taking. And when things go really badly wrong, it's because people didn't understand the risks they were taking.
Yeah.
If you know the risks you're taking and things go badly, then it's not a surprise. When you say, I was calculating on that, I've got another risk over here that might go the right way. So doing enough work to really understand the risk. And if you're buying a fund, do the work on the fund so you understand the risks in it. If you're buying an individual company, make sure you've done enough homework on that company so you understand the risks.
Yeah. And I must admit, I like on the fund, you don't use leverage, do you? You don't sort of like, and that's always a problem, is such that people sort of like use huge amounts of margin, get themselves unknown, they don't know, and then it turns negative at the actual asset base, but the derivative or the leverage you're using means that you lose more than you should, or even what you start off with, I guess, as well.
Yes. Yeah. I mean, I'm not a fan of leverage trading.
Yeah.
The funds don't gear up, and because we're investing in small and mid-sized companies, you could say that the risks are a bit higher anyway. So why do you need to compound that by putting leverage on as well?
Yeah, cool.
But in general, the problem with leverage is that it introduces a whole set of risks that are really difficult to understand, and it makes that job of understanding the risks you're taking much harder.
Yeah.
I mean, and if you use leverage in a trading thing, I'd say, well, make sure you hold the cash against it. Just because you're not forced to do that doesn't mean you shouldn't be doing it.
Yeah, as all those hedge funds found out when the GameStop Reddit brigade sort of like took them out by the knees, I think. So all the shorts got really sort of not just get squeezed, they got sort of like put 10 feet underground. Okay, brilliant. Okay, well, thanks very much, Paul. If investors want to put some money into the Amati Global Fund, where is the best place to see? Is it to presumably it's not going to not email you personally, but is it just go on the website, is it? Or
yeah, we've got lots of information on our website. The fund should be on most of the platforms that people might be investing through, or it can be bought directly as well through T. Bailey. As you know, we're also launching a new fund right now, which is a strategic metals fund.
Great.
Designed to cover off.
What is a strategic metal? I'm guessing it's not iron ore, is it? It's basically a cobalt or something.
By strategic, it's a slight play on words in that, we think right at the moment precious metals are strategic in the sense of being a hedge against rising interest rates and this inflationary scenario that might come along. But also, obviously, we've got the much hotter area of the market right now of the metals that are going to be required for electrification and reduction of our consumption of fossil fuels over the next 30 years, and that's a major kind of industrial trend.
Yes.
The fund won't initially be heavily in those because they're so hot right now, but whereas actually gold has sold off quite a lot, and
Bitcoin has taken it down, hasn't it? Unfortunately.
Well, that's possible, and and Bitcoin
or yield, effectively interest rates going up, yield on 10-year treasuries as well.
Yeah, and but gold's been around a long time, and I think it probably will outlast Bitcoin, but who knows?
Oh yeah, no, I'm with you. Yeah. Okay, great. Well, big congrats on the new fund then, and we'll look forward to hear it. But I'd certainly say to investors, if you're looking for a fund, small, mid cap, and you want a bit of diversification, then have a look at sort of the Amati one. I mean, to hit the double-digit returns over 20 years, when effectively the FTSE 100's gone totally sideways, says a lot because it's long-term returns. So big congrats on the returns. Thanks very much for your time then, Paul.
Paul, thank you very much.
Yeah.
Thanks. Good to talk to you. Thanks.